the mood in India is very much similar to what you had at the Super Returns conference in Singapore. India continues to, I think, perform very well for investors in particular, whether on private equity or on public equity side. And clearly, I think investors, having made substantial amount of returns, are keen to see what they can do more by deploying even more capital in India.
And when you're talking about deploying more capital in India, what are the sectors that investors are keen to invest in? Because typically, like I've said in the past, it's always about being, the private banks, the technology sector. The Indian consumer has really been always the shining star, so to speak, in delivering compounding returns. Aside of these sectors, where else is the interest growing from the foreign investor community?
I think from the foreign investor community, we are in fact seeing more diversification in terms of sectors they are keen to invest. And in fact, they are deploying capital in infrastructure, they are deploying capital in real estate, they are deploying capital in number of direct-to-consumer companies, number of fintech companies, both on the private and public side. So what you're seeing is the breadth of the sectors that investors are deploying capital has increased in a meaningful manner in the last 3 years.
I also want to get your sense on how do you see the macro environment shaping up for India. Jamie Dimon is in India, and so obviously that's a big stamp of approval for how important the market is in the larger scheme of things as far as JPMorgan's overall business is concerned. And so I want to understand from you, how are you thinking about how the macro environment is shaping up in terms of the growth potential that India has currently?
Actually, on the macro environment, the way I think we would look at it is high degree of confidence in delivering a very stable growth. So I think if you look at the number of building blocks which are already in place in terms of digital infrastructure, physical infrastructure, private spending and government spending, the building blocks for achieving 6.5–7% real growth or 10 to 12% nominal growth are very, very solid. And I think India, as on a macro basis, can actually deliver this 10 to 12% nominal growth with very, very little risk over the next 5 years, which means it's a very, very constructive environment for macro in the country.